Hey, Wall Street. Hey, viewers. Hang in there. We have Matt Cheslock here to talk it all. After a day that we thought there'd be some respite, well, we had some rest, but I guess we wouldn't say the market had any.
No, we're going to have to talk people off the ledge here. The market just fell another leg lower here, and there's just really not an indication to buy. Everything that's come out, every tweet that's come out, every headline has not been positive, and it's not given anyone a reason to buy anything just yet.
Is this a Huawei? Am I pronouncing that right? Is this a sell-off because of that?
Well, certainly that started it. That's just another fear of the U.S.-China deal not getting done. Relations aren't going to be better because of this, certainly. It started out so positively Monday. We started getting tweets on Tuesday about, tariffs and things like that. And then we get this on top of it, that we're behind it and we're going to extradite. Right now, there's no reason for a buyer right now.
No reason for a buyer. So Matt Cheslock, you are bearish today.
No, I'm bearish. I'm just based on what I'm seeing in the market. I think somewhere there's going to become some value and there's going to be some reasons to start entering the market. But right now we still have the Fed on deck. And what are they going to say next week as we start to approach? Is it a one and done? Are they not going to do anything in 19? What does that say about the economy? So it now brings up questions. If they aren't raising rates, why aren't they raising rates? And how quickly they've just changed their mind.
Is that why we're seeing the financial sector lag the most today?
Yeah, it's funny. The financials didn't rally on the anticipated rate hikes that we were supposed to get in 19. They said that was not going to be great for the consumer and the banks might suffer, when historically banks and financials do well in a rising rate cycle. And now they're, maybe not going to raise rates and maybe even cut, as some people are now speculating. So that's not going to be well for the financials. So financials have been between some cross currents, but they're certainly a laggard today.
Matt, we also have that flattening yield curve. Have you guys been watching that? Are you concerned?
Yeah, it's a concern. Every recession has been predated by an inverted yield curve, but not every yield curve brings a recession. So I think people are jumping the gun here a little bit. This may be one of the times where we get a short-term inverted yield curve and a recession doesn't follow. I don't think that necessarily every sign points to a recession right now. And they usually happen 18 to 20 months later. So right now we've got a lot of work to do. The Fed's got a lot of work. They don't have a lot of ammo left in their pocket. It would have been nice if the rates were a little bit higher. They could cut a little more aggressively. That's never a great thing to say. And if they also had their balance sheet a little more in order, where they're trying to unload as opposed to taking it on. So there's a lot out there right now. And certainly what's going on in D.C. is not helping matters, at least for, headlines.
Yeah, adding that to the mix. Well, we had a little bit of market, a little bit of econ. Matt, I'm sure you have to get back on this wild day. Good luck out there, and thanks for taking the time.
Absolutely, anytime. Thank you.